See this overall picture of U.S. assets, man, as I got the chart here in front of me, lowest in 4 years.
How global economic giants like the US and China tackle tough issues. At this point, it seems like the power struggle is increasing at an alarming rate, and the US will have to go through a rough patch. Janet Yellen, the head of the US Treasury, recently went to China. There, she had some serious talks with Beijing. She told them to ease up on their industrial growth and stop flooding the world with cheap goods. China's president, Xi Jinping, is pushing hard for more industrial growth, especially with real estate troubles looming. So can China really hit its growth targets without going all in on manufacturing? Yellen pointed fingers at China, saying the US lost 2 million jobs when it joined the World Trade Organization. That made America's factories shrink. In reality, it was big companies chasing cheap labor in China to make more money. They didn't want to pay fair wages to American workers, so they went for lower-paid workers in China to make bigger profits. Well, that's quite a shocker. Yellen dropped a bombshell warning. She threatened to punish Chinese banks if they helped Russia during its war. This move is seriously risky. It's like using the power of the dollar to punish a country, almost like freezing their assets. Some say it's even worse. This whole situation reminds everyone of how much power the US throws around. So Yellen basically said that any banks helping Russia buy stuff for its military might get in trouble with the US. What counts as a big transaction? There are a lot of unanswered questions here, and it's making us uneasy. When it comes to trade, banks usually play a big role. They give out loans, offer insurance, and help with exchanging money. When a Chinese company sells stuff to Russia, there's usually a bank involved. This bank helps with the money side of things. Trade between Russia and China has grown a lot since 2015. China buys more from Russia than it sells to them, and last year their trade hit $240 billion. So if Yellen goes after Chinese banks, it could mess with how smoothly trade flows. Plus, it's hard to keep track of all the goods going back and forth, especially stuff that could be used for both civilian and military purposes. For example, China might start selling more to countries like Kazakhstan. After those goods leave China, they often end up heading towards Russia. Lately, we've noticed a big jump in Chinese stuff going to Central Asia, especially since the conflict started. And it's not just Central Asia, dual-use goods are passing through places like Turkey and the UAE too. So you can see how these secondary sanctions could have a huge ripple effect. Sure, kicking Chinese banks out of the dollar system might seem like a hit to Beijing, but if it boomerangs back to the US, it could set off a domino effect that scares banks everywhere. The fallout would be massive, reaching every corner of the globe. Let's not underestimate the size and reach of Chinese banks. So we're talking about banks like ICBC, China Construction Bank, and the Bank of China. These are giants, even bigger than Bank of America and JP Morgan. Their reach is massive. These banks operate globally, dealing in dollars and doing business all over the world. Yellen's main weapon is threatening to kick them out of the US dollar system. That means they could lose access to their dollar holdings, or even worse, both. If that happens, it could spell big trouble. If a bank can't use dollars anymore, it's basically out of the global banking game. The US dollar is super important, it's the main currency used worldwide. Just how much do we rely on it? Well, a whopping 74% of trade invoices in Asia Pacific and 79% in the rest of the world are in dollars. Plus 60% of international deposits and loans are also in dollars. So if Yellen cuts off Chinese banks from using dollars, it's going to mess up China's trade big time, at least in the short run. Chinese banks do a lot of important stuff. They help companies build factories, they handle oil trades, and they take deposits from people, often using dollars. But if they get cut off from using dollars, it's going to be a big mess. Energy deals will need to be reworked, Western investment in China will slow down, and they won't have access to SWIFT anymore. It's going to hurt in the short term, but like Russia, it might push China to shake up its banking world. They'll switch to using dollars even quicker than Moscow did. China's economy is way bigger than Putin's, so they've got more tricks up their sleeve, especially in physical trade.
Across the whole asset spectrum from China, many would say is possibly to help them defend the yuan, but it comes to those treasury markets that I said, they're not waiting around. I mean,
so it's in their best interest to keep China doing well. If the banks can't use dollars, Saudi Arabia will probably let them pay in Chinese yuan or Saudi money. This means more local trade and a boost for business. And they'll do it because they buy a lot of stuff from China. Plus, China's the top trading buddy for over 120 countries, including big ones like Japan, South Korea, and Taiwan. That's like a shield against Yellen's sanctions. If Chinese banks lose access to dollars, it could force countries all over to start using dollars less. But they still need to trade with China, so they might switch to using other currencies. Yellen's move could basically end the dollar's reign in global trade, making her the queen of this currency shift. That's how badly things could go wrong. China's central bank keeps on buying gold, even though prices are sky high. They've been at it for 17 months straight, adding up to nearly 73 million ounces in reserves. China's taking notes from Russia, whose reserves got frozen and might even get taken away. China's got even more dollar assets than Russia, with almost $800 billion in US debt. Even though they're selling off some of their bonds, that's still a huge risk if things heat up in this economic war. China could end up with frozen assets, just like Russia. So China's putting a lot of faith in its industries. They're aiming to fill the gap left by their struggling property sector by ramping up manufacturing. As China keeps sending out cheap goods, their exports just keep growing. In 2023, China's trade surplus hit over $820 billion for almost 5 years straight. That means they're exporting way more than they're importing, and cash from all over the world is flowing into China. And with a growing trade surplus comes more tax revenue, which adds up to an even bigger pile of reserves for China. So China's got a heap of dollars to invest, which sounds great. Putting it into treasury bonds isn't the best idea, especially after Yellen's threats to Chinese banks. Besides Western assets, China has two main options to invest their cash. First up, they can put money into Belt and Road countries. Last year, their involvement in this project shot up by 24%. They poured over $90 billion into investing and building in these countries. That's a massive amount of money going overseas. So, giving out all this cash helps the countries that get it, but it's also a smart move for China. They're spreading their money out of dollar assets and investing in real stuff, like factories overseas that make actual products. Plus, China's been lending out huge sums of money directly for almost 10 years now, over $100 billion a year. These loans don't come from Chinese banks and are used to fund projects worldwide. It's another way for Beijing to put their dollars to work. Gold is becoming more important than ever for China. Loans and investments in other countries come with risks, like if the other country can't pay back or if sanctions block access. That's why China's buying so much gold. It's like a safety net because no one can take it away or block it. Janet Yellen might not be helping matters by threatening to sanction Chinese banks. It could speed up the end of the dollar as the top currency. There's no going back now. Yellen's only solution seems to be punishing China, but will central banks keep buying gold? Let us know in the comments below. Stay safe and don't forget to like, subscribe, and stick with us as we navigate through these wild times.